Hello everyone and welcome back to another breakdown of the live testing of the disruption model. So in this breakdown I want to go through the EU long that I took on Friday. So what I've decided after following this trade is that from the base time frame I would like to have some sort of high time frame disruption going forward. Now the problem with this is it's not a problem, but the thing with this is happens less frequently. However, when they do happen, these positions play out more often than not. So the win rate on these is incredibly higher. Now what I mean by that is, like, instead of just doing a sec before I start drawing everywhere, instead of just having our standard breaker structure POI and then doing the disruption model here, what we're going to do is, say we have intent, for example, we need to have that intent to be disrupted, or whether it's the two rules, whether the SR or whatever, we need to have some sort of disruption, and then we're going to wait for that breaker structure to happen, and then we're going to and then we're going to look for price to come into the POI, and then we're going to replicate the exact same thing that you see here, and this will allow myself to again only look for one set thing, and it makes things so much easier when your eyes start getting fixated and only looking for that one set model, as opposed to if you have a situation where you're trading either this POI or you're waiting for disruption on the higher time frame. This adds too much variety into the model, which makes it hard to be consistent. So I have decided that going forward I'm going to go for the higher probability setup, which is waiting for this, regardless of the fact that it's less frequent, but I am that's not correct English. I am happier. I'm happier waiting for this setup to come up because I don't necessarily have a problem with FOMO. So if a setup's not there in the day, I don't necessarily mind. And this allows me to be consistent, allows me to have a higher win rate, because effectively I trade less, there's less exposure, and which makes it seem like there's a higher win rate, but I'm just taking less trades. That's all it is. So for me going forward, I'm gonna go for this model. It's very similar to in the course videos when we were talking about order flow transition, where we have mitigation, and then we have obviously another point of invalidation there. Price goes on to violate it, and we know that going off the intent here is incredibly high probability, purely because of the order flow transition, and then you obviously confirm on the lower time frame to continue lower. And those of you who have followed me for a while and have followed my model will know that this is the setup that I love to have, and these are the setups that I call are the golden. It's the golden setup, really. So it's that sort of idea. So instead of order flow disruption, this is going to be structural disruption, basically. We can potentially have order flow disruption. I mean, here, right, we do have order flow disruption because we've got this point of mitigation, right? Price comes down, but we wait for that to be taken out. Obviously, we didn't know for it's going to be taken out. But say, for example, if it was the case where, because we had obviously bearish intent, but then it wasn't taken out, and price continued to create that bearish move, we could obviously look for a short, but obviously that wasn't the case. We ended up breaking above, and then we're obviously starting to look to go long. So there's no reason for me to even look for a short in this case. Even though order flow is present, we still need to have some sort of disruption, and there wasn't any in this case, which is why we didn't go for the short. And if you think about it, it completely eliminated that loss that we potentially could have taken here, because my old model, I say old model, my inception model, I would have looked for an entry here, and if I missed that one, I would have looked for an entry. Wait, did I even break? Yeah, it did. So I would have looked for an entry point here, but obviously we didn't do that because we're using the disruption model. So going forward, I'm gonna wait for that higher time frame disruption, and then I'm gonna replicate it again on a lower time frame. So for this one, there was nothing coming in from 7 o'clock. All we had was so it will test your patience if you are following this way. So we have low, high, and then we have the breaker structure. We have low, high, and then we have the break structure, low, high, mitigation, and we didn't end up forming that low. It ended up breaking eventually here, but it didn't create that low anyway. So we have this move here going forward, and then following that, then eventually we have this bullish intent. Obviously we're not going to look to confirm at the moment because we're waiting for some sort of disruption first. So now that we've got intent, we want to have some sort of disruption of the intent, or if it caused an SR, we need a disruption of that. Now what I could have done, just looking at this, I don't know if the candle structure has changed or if that was already there, because I'm pretty sure that wasn't, and this was the low. I'm pretty sure. That's the problem with doing breakdowns. If you do it like a day or so, even a few hours afterwards, sometimes the candle structure changes on the 15-second or any seconds time frame even, but the low is here at the moment, but it doesn't really change the outcome at this case. But we have this disruption now, price taken out. All we need to wait for now for us to continue is for price to break above, which it does then. So we have this break of structure going on here, and we go on to create this high, and the low is here. Now all we need to do is locate our POI. Now why is my POI here? So in this case we have our range low, which is all the way here, and we have the closest POI to the imbalances here. That's a fair range, and you have to bear in mind I'm looking to confirm straight on the 1 second. So if I have too big of a range, what's going to happen is, say I'm going to have let's say this example, say there's most likely a 1 second change in trend here for us to even enter a trade here. For example, price probably would have taken us out a stop loss, or most likely break even, given the way that price has moved. So what that's done is this is just wasted time, this move here. So for clarity reasons, I went to the 10 second. Where's my thing gone? Oh, I'm not even using that. Let me see, has that changed? No. Okay, so if we go to 10 second, so in this case, inside that 15 second, we have this 10 second very clear POI, and this eliminates this one. So say if we had a 10 second pullback here, then I would have marked out the whole 15 second range and taken the trade off there, because then the mitigation would make sense. Whereas here, it at least tells me that there's more at the extreme as opposed to near the imbalance. Obviously this is still a valid point of reaction in terms of where the 15 second is, but it makes more sense for price to come further down, and it changed my POI to for 1.3 pips. It changed it all the way down to 0.6 pips. So that basically it prevents me from wasting time and energy on trades that, for example, like this move here, purely because I didn't refine it far enough. I don't often refine too much on the seconds. It's more for clarity reasons why I would refine, but I often don't need to, purely because it's normally pretty clear. But in this case, it was just purely for the reason that I'm looking to go straight to the 1 second. Whereas with the old model, with Inception, obviously I would have looked for that confirmation. I would have traded straight. I would have marked that whole POI out loosely, wait for the confirmation and done Inception, and I probably would have had the same outcome if there was an Inception entry, if there was. But I would have, it would have eliminated that first move anyway, right? But anyway, so once price came into the POI, I went to the 1 second, and then what we have is we have the range low, range high, breaker structure, range low, range high, and then we had the next breaker structure. So we formed the successive retrace, but then price pulled back and created a new high. So we have the 3 breaks. So we should, in theory, be moving up the time frame. But what happened next was that we had price crashing through. So I had no reason to go up the time frame at that point. So I can stay on the 1 second here. Because if I had to go out the time frame, price continued, I had to go to the 5 second and then do the exact same thing and wait for that disruption to happen. But anyway, we had the disruption, so that first move has already happened, and that's all been taken out. And then all I need to do is reset the 2 rules. So we have low, high, breaker structure. These lines are the breaker structure lines that I put. And then we have high, breaker structure, created this high here. And then price came and pulled back. As soon as this happened and price came into that's not right. There we go. As soon as price came into this range, between this point and this point, I manually executed, and that's where price triggered for me. Now I was going to do a 0.5 stop. Now from this point, our 0.5 stop was roughly around here. Now obviously at the time I didn't know where the 0.5 stop was. I knew it would be somewhere around there just from eyeballing. So I went for a 1 pip stop, just to cover this POI as well, because then we have the IM and then we have the SR both covered. A 1 pip stop is perfect, and it allows me to be safe. And I think compared to the Inception model, I think I'm more confident using a 0.5 stop loss on the Inception as opposed to this. But in terms of my stop loss placement, it still makes sense. But yeah, I could have had a 0.5 stop loss and placed it here. But yeah, it's the decision that I had to make in terms of when I pressed execution. I need to know what stop loss I'm going to put, and yeah, that was the only time that I had. So I used the 1 pip instead. So and went from that. And price did come lower, and it did react off the IM. And even if I did 0.5, I wouldn't have been taken out. The 0.5 stop loss was about here. So you know, in the end of the day, it was fine. But that was my decision making. And to be fair, this whole process of execution was so relaxed. It's unreal. And I'm sort of hoping that this model plays out this month and gives me a good month. It's already giving me a good month anyway in terms of the return. But I want to make sure that it is actually consistent. And this was obviously an NFP day trade, and I don't even trade NFP usually. I just thought, why not? Because I was at the Commonwealth Games this week. I didn't trade a few days, so it sort of leads some inconsistency in the testing, purely because I should be testing it every single day in that session, just to test it out. And I'm not back testing purely because I prefer live testing, seeing how I would react live. That gives me a better idea about how I'll perform in terms of using this, how relaxed I'll be, what kind of mentality and emotion that I have in terms of placing the trade. Am I stressed? Am I sweating? You know, and things like that. And I have to admit, comparing this to the Inception model, I am loving this so far, and it is so easy to execute. And because again, you're waiting for the exact same thing every single time, I am more than happy to just wait. But yeah, so the only thing going forward that I'm going to change is I'm going to wait for that higher time frame disruption and then go forward from that. So in terms of managing this trade, obviously, so the target point, the minimum target point is obviously that 15-second high. That is our base time frame. And the reason why I want to mention this, and I mentioned it before, is that when price reaches this POI, when price reaches this high, right, and takes it out, that is the minimum target for this move. Say if this was a 4-hour time frame, for example, we'll be trading from this range low to this range high, and a lot of us would see that as a win if it goes out to take out that high. But the reason why we're not seeing this 15-second as a win is because not the reason why I see it as a win, but the reason why some of you may not see this as a win is because the profit is not enough, and I say that with abbreviations, because the profit is not enough, you see that as a loss, because the price does eventually come out and take it out, right? So some of you wouldn't even move your stop loss to entry, whereas obviously I took my partial point as usual of my 10 pips. And then price didn't reach my eventual target, which was that 4-hour high. But yeah, I took my partial. Price lingered for a bit, and then it eventually came flying back down. And then the rest closed out at entry. But it does, yeah. Come on. I could have sworn it does it fairly early on, doesn't it? Oh, I thought it did. I thought it was fairly early. So I was taken out here because my stop loss was in profit anyway. And then the price came eventually. The thing is, if you didn't take any profit in this move or anything, right? A lot of you will see this break even as a loss or whatever, however you see it. But I mean, it does eventually crash down. There we go. So a lot of you will see this as a loss. But the thing is, this trade was a winning trade, and this is what will affect your statistics and your mindset going forward. Is that you may think that the strategy or whatever model you're using is not working when it is. It's just not meeting your It's just not meeting your profit target that you wish to gain from a trade. And this is the problem with smart money concepts. It creates this I don't want to call it ego, because I'm not saying that I'm not saying that some of you guys have ego problems, but it does create this expectation. That's the word. It creates this high expectation that we should be taking 10R per trade, but that is not the case, right? It's not always going to happen, and we still need to understand that. We still need to understand how structure actually works, because we know when price breaks that structural high, we're going to have some sort of pullback, and it's either going to continue or not, and then we carry on, and then we have that change in trend. And that's how price moves. It moves in waves of highs, lows, change in trend. Then you got lows, high, low, high, low, high, and then change in trend, high, low, and so on. That's just how the market moves. But we need to understand what is the difference between a winning trade and what's the difference between a losing trade. If price was to not reach that minimum target, if price was to reach here and then come back and take me out, I was at break even at this point anyway, but if price was to come back, this trade has lost. Even if it was a break even, this trade was a losing setup, and that's fine. And that is the statistic that we should be taking in our minds going forward. For me, that's how I'm measuring whether it's a winning or losing trade. I'm not measuring it based on my partial point. I'm measuring it based on if it's reaching that minimum target. Because I mean, let's see what this was anyway. Gosh, yeah, I think it's like 68 pips, isn't it? Yeah, there. So this minimum target. Oh, sorry. Right. So this minimum target was what? It was a 1 to 3. Now I wouldn't take partials there myself, and a lot of you wouldn't take partials there or anything. You wouldn't even set your take profit there, which is fine. It's not a problem. But again, we need to understand that this is the winning trade, right? Again, exact same thing. If it was a higher time frame, right, it would have been the exact same thing. We would have targeted to take out that high, for example, and then that we would have called that a winning trade. But we need to understand that this is still a winning move because it's taken out that structural high. Now I know I've repeated that last bit a fair bit, as in this video I said it over and over and over again. I hope in that repetition that will sink in, because I want to make sure that when some of you are saying that the strategy is not working or the rule set's not working, I want to make sure that you aren't classing these moves as losing trades purely because it didn't reach your partial point or your target point or your profit target, whatever it is. It doesn't mean that it's necessarily lost. It just means that your money management wasn't what you expected, basically, and the profit wasn't what you expected, which is fine. But you need to accept that that is not the strategy at this point. It is your money management. I'm not trying to put the blame on you. I just want to make sure that going forward, if you can visualize it this way, then you know psychologically you are doing something correct. If price is reaching that minimum target, you can tell yourself that you had a winning trade, but it just didn't reach your profit target, which is fine. But you had a winning setup and you were able to identify it. Not only that, you were able to execute it. You have a winning model and you know exactly what to do, but it just didn't reach your profit target. That's all it was. So instead of trying to instead of trying to see the negative in the situation, because I mean price does eventually obviously come back, and then some of you who didn't move your stop loss, for example, you would have been taken out. Instead of seeing this as a loser, instead of seeing this as a negative, you see it as a positive in the fact that you found the ideal setup, you traded from range to range, which is our targets, and you did it perfectly, you executed it. So you are a winner, you're a successful trader, and you can be consistent. And some of you are probably consistent without even realizing that the fact that you're able to do this, but because it's not reaching your whatever target that you wish to gain or whatever profit you wish to make, you're seeing yourself as not progressing, you're seeing yourself as losing. But for some of you, it may not be the case. You could be very consistent and without even realizing it. So have a look back at your previous trades, have a look back at what you're doing, and have a look how many trades actually reach that minimum target, and then you can decide, are you consistent or not? Because if you're able to do that consistently, you're a consistent trader. You just need to work on your money management. That's all it is. But yeah, I don't think I've ever been into that much detail into that. I don't know. I think I mentioned it in some videos. But anyway, I really want to emphasize in this one because I realized from doing some of the journal reviews today that some of you guys are classing these trades as losses, but you're actually winning. You're just not reaching your target point. again, I sound like a broken record at this point. I've said that over and over again in this video. Hopefully it sinks in, and hopefully hopefully it gives you a different insight. Anyway, I hope you guys have enjoyed this breakdown. It's pretty straightforward, I suppose. I am enjoying this testing. It's bringing some enjoyment back into trading. I have to admit, trading does get very boring eventually. Everyone will get bored. I mean, it's nice making capital and increasing your account, but the process does get very boring. And that's the main reason why I'm still involved in the physio scene, purely because it gives me some sort of rewarding feeling. And to be honest, that's where my passion is. I don't know how long that will last because I'm still young, but that's where my passion is. But this has given me a good level of excitement, and yeah, I'm very pleased with it so far. But yeah, hopefully we'll see what happens over the course of this month, and yeah, I'll keep you guys updated with every trade that I take. But for now, I hope you guys trade safe for the coming week. Stay safe and enjoy the rest of your weekend.